Ever found yourself puzzled by the term closing costs when buying a home? Well, you're not alone. Closing costs can sometimes be a bit of a mystery, but let's demystify them together. In its simplest form, closing costs are the fees and expenses that are over and above the price of the property. Both buyers and sellers incur these costs to complete a real estate transaction. So, what does this include? Think of costs like loan origination fees, appraisal fees, title insurance, homeowner's insurance, taxes, deed recording fees, notary fees, and credit report charges. They're like the extras at a restaurant. You know, that appetizer you couldn't resist, or the dessert you decided to splurge on. Just like those extras add to your bill, closing costs add to the overall cost of your home. This might sound overwhelming, but don't worry. Just remember, these costs are a normal part of the home buying process. So, closing costs are essentially the final pieces to the puzzle in your home buying process. Now that we understand what closing costs are, what are some common ones you might encounter in California? In the Golden State, one fee you'll encounter is an escrow or settlement fee. This fee is paid to the neutral third-party escrow agent that will hold all documents and funds while your home is under contract, also known as being in escrow. Once both parties have met all the conditions of the transaction, the escrow agent will record the deed with the county recorder and will transfer funds to the appropriate parties. Another fee is the appraisal fee. This is what you pay for a professional to determine the fair market value of the home you're buying. Title searches and title insurance are also common. These ensure that the property you're buying has a clear title, free of any liens or ownership disputes. You might also come across prepaid interest, taxes, deed recording fees, and credit report charges. Prepaid interest will vary based on your closing date. Taxes cover property and transfer taxes. Deed recording fees get your ownership on record, while credit report charges cover the cost of checking your credit history. Check with your lender for a complete list of fees specific to your transaction. Remember, these costs vary based on the property's location, the type of property you're buying, and the type of loan you're getting. Now, the million-dollar question, or possibly several thousand-dollar question: how much should you expect to pay in closing costs? The answer depends on a variety of factors, but as a rule of thumb, home buyers generally pay between 2 and 5% of the purchase price in closing costs. Between 2 and 3% is common, but can be on the higher side if you're paying points or loan origination fees. This means that if you're buying a home priced at $300,000, you could expect to pay anywhere from $6,000 to $15,000 in closing costs. It's a wide range, but it underscores the importance of budgeting for this necessary expense. After you've applied for a loan, your lender will provide you with a loan estimate. This document will give you a detailed breakdown of your estimated closing costs, helping you to prepare financially. Remember, these costs are an integral part of buying a home. So, while it can be a significant chunk of change, being prepared will help you budget for this important part of the home buying process. But wait, is there a way to keep these costs down? The answer is a resounding yes. Let's dive into some strategies to minimize closing costs. First, let's talk about negotiation. You can negotiate with the seller to pay a portion of the closing costs, up to a limit based on your loan type. This is not uncommon and can significantly reduce your out-of-pocket expenses. Second, consider shopping around for certain service providers. Just like you compare prices for a new car or television, do the same for services like home inspections, title searches, and homeowner's insurance. You might be surprised at the savings you can find. Last, ask your lender about lender credits. These are essentially a trade-off where you agree to pay a higher interest rate in exchange for lower upfront costs. It's a smart move if you plan to stay in the house for only a few years. So, while closing costs might seem daunting at first, with the right strategies, you can keep them to a minimum and make your dream of homeownership a reality.